Morning and welcome to ET Now's Buy Now, Sell Now with me, Varun Hiremat and Karunya Rao. Before Karunya walks you through the markets this morning, let me just get you up to speed with the headlines, beginning with the fact that Reliance Industries is now a debt-free company. Well, at least on the net debt level, the dream has been fulfilled far ahead of schedule, and Jio has now raised 1.16 lakh crore from global investors, and it's just an absolute tremendous run they've been on in the last month or so. Coming forward to Future Group, which is also linked to Reliance this morning, reports indicate that Reliance is looking to buy a stake in the group company. PE firms are also circling Future supply chain. This is obviously on the back of all the debt issues that the Kishore Biani group companies have been facing, and it seems like now these assets may be coming up at a steep discount for a cash-rich player like Reliance. Moving forward to the weekly memos we had from Ray Dalio and Howard Marks, but specifically from Howard Marks, the powerful rally is built on optimism. The rally has overlooked potential negatives. So now he's coming out and talking about a lot of potential downside that he sees in the market and taking quite a conservative view. Next up, ICICI Lombard. ICICI Bank has divested a 3.96% stake in ICICI Lombard. Perhaps that has something to do with the shareholding norms. If not, maybe some cash raising for ICICI Bank. Nonetheless, that has happened. And finally, the next big story is fuel price hike. Diesel prices are now at a record high, and the price hike has been for the 13th day in a row. Petrol diesel prices up cumulatively by 7.11 and 7.67. So we've seen quite a large hike coming in there. And those are the headlines for this morning. Over to you, Karunya.
Right, those are some developments that we're tracking at the top of this hour. Looking at the markets, slightly lackluster, I would say. Sensex is just trading along the flat line with a gain of about 50 points. Nifty is also about just above that 10,100 mark. You have a good traction being witnessed on the broader markets, however. The small cap index has gained 1.6%. Mid cap is also picking up some pace. Right now it's up about 0.7%. If you look at the advanced decline ratio on the Nifty 50 index, 33 to 16, so not a bad ratio really, that is in favor of the advances right now. Sectorally, barring the FMCG, IT and metals pack, all of them are firmly in the green. In fact, the downside also that you're witnessing in these three sectors is not too significant. Only the IT index is losing about close to 1%. But FMCG and metals are just trading flat with a slight negative bias. You have the PSU banking space looking quite upbeat, up 1.7%. Nifty Realty is climbing like anything. Almost gained 4%. Nifty Auto is up nearly 1%. Nifty Bank is looking quite upbeat, gained about 150 odd points as we speak. What are the individual stocks standing out? Bajaj Finance, you have the stock gaining in the excess of 5%. Tata Motors has witnessed a U-turn after their numbers. We saw a massive sell-off come by on the counter, but last couple of days they have seen some recovery from those levels. Right now trading just above that 100 rupees mark. Bajaj Finserv also looking good. Adani Ports is up nearly 3%. Axis Bank is up 2.5%. UPL, Maruti, BPCL, these are some names gaining in the excess of 2%. Varun.
Thanks so much for that. Let's quickly get you up to speed with the COVID headlines before we bring on our guests. Let's begin with the fact that global cases now top 85 lakh with over 4.5 lakh dead. Second, cases in India have crossed the 3.8 lakh mark. Mumbai City, Min, eyes opening, no calls yet, says Deputy CM. So that's something coming out specifically for our city here. Remdesivir drug may hit Indian markets by June end. So that's a good positive information flow coming in from the medical sphere. India halts HCQ research at 22 trial sites. So now that all the data is coming out regarding the potential harms of this drug, we're halting some trials. Delhi caps COVID-19 test rate at 2,400. So there's a cap coming in on the test rate. Assam's recovery rate exceeds India's average, standing at 59%. So one state seems to be recovering faster than all the other. Beijing outbreak under control. That's what China experts have to say. WHO declared COVID-19 pandemic 100 days ago. Actually, is the person who said that, the China expert. No need for more lockdowns in the US is the word coming in from Anthony Fauci. So these are the top
Now, Salna, then welcome in Kunal Bothra to talk technicals, Vikas Sethi on the fundamentals. Morning, gentlemen. Thank you so much for joining in. Kunal, what are the stocks on your radar today?
So good morning, Karunya. I think the market texture is looking quite okay. We've seen a good carry forward momentum from what we saw yesterday in terms of the index moves. But then I believe that since the markets are now going through more of a risk appetite mode or a risk on mode, it's bound to be that some stocks on the pharma side or the FMCG space, they could take a bit of a backseat. So I'm suggesting a one buy and one sell. The first one is a buy in a high beta sector, that's from the auto pack. Ashok Leyland is what I would pick up as a first stock. It looks fairly attractive on the short-term charts. There is a bullish flag pattern on the hourly time frame. The stock is just about on the verge of breaking out about this 52, 52.5 on the spot levels for Ashok Leyland. So that's the first buy which I would suggest. Targets to be kept at almost 57 plus and stop loss to be kept at 49. The second would be a sell on Aurobindo Pharma. The stock has been struggling somewhere around this 800 mark. I think 780 to 800 approximately has been a grinding range for Aurobindo Pharma. So I'm sensing that with the markets going to a risk on mode, it's bound to be that the earlier performers could take a bit of a back seat. So I would suggest a short on Aurobindo Pharma. I think the better level would be to try and short it below the 780 mark. Targets to be kept at 740 and stop loss to be kept at 812.
Okay, thanks for that, Kunal. Let's also bring on board Vikas Sethi. Hi, Vikas. Good morning. Being a fundamental guy, looking at what's awaiting us in the Q1 results, where, all these PE ratios or any EV EBITDA, anything you look at is going to slightly look inflated. What cues are you getting from the market, and how do you feel about these levels? Do you think that they'll hold up?
Yeah, good morning. No, first, I would like to congratulate you and your channel on successfully completing 11 years. I wish you all the success, and I think the best is yet to come. And as far as the markets are concerned, although if you look at the market from the traditional price earnings multiple point of view and look at the results, more particularly the April to June quarter results, they would certainly look very expensive because April to June quarter, most of the companies have been locked down and the results would be pretty bad. But I feel if you look at it from the next 6 to 9 months, when I feel things would become normal, then things would start looking good and we could see a V-shaped recovery in most of the sectors. And that's the reason why the markets are showing resilience or are even bullish and have recovered smartly from their lower levels. So at the current level, since we've already run up very fast, we might expect some correction over the next few days. But then that correction would be a very good opportunity for investors to acquire fundamentally solid, good companies and sit tight with them, hold on to them for the next, say, 9 to 12 months. And I'm sure they will get substantial returns on their investments made in any fall which we see in the days to come.
All right, let's shift gears to viewer queries then. First up is an email from Ravi. He's based out of Indore. He says he's bought 200 shares of Coal India at 127. He has a short to medium term time horizon. Kunal, coming to you first on Coal India. Yes, the viewer here has made slim profits on this one already. But if you look at the way it has moved over the last 1.5 months, it's been a bit of a slow mover. So how much more potential do you see over the short to medium term? That's what our viewer would want to know.
So yeah, you've perfectly mentioned it very well, Karnya, that it's a slow mover. It's been one of the few stocks which has gone through a lot of grind. And I think the dividend income has been the only source of, I think, bigger beneficiary where you've seen Coal India performing. But other than that, the stock price trends have not done, as per the expectations of a lot of the long-term investors as well. So I think in that regards there has been a good amount of disappointment. But then on charts on short-term time frame, the stock seems to be finding some good support. PSU basket overall, is seeing good bit of traction. So I think in that regards you might see the stock, maybe heading up to say 145, 150 levels. I think 125 is now a very strong support zone which the stock has established, and I think that's been the level where you've seen a lot of demand coming back for Coal India. So I think in that regards, the strategy should be to try and hold on to long positions. See, the markets are a bit stable and quite buoyant at this time. So in such kind of scenarios and times, you tend to see these stocks which have been more laggards. They also tend to pick up price action. So if the markets continue to move up higher, say even for the next 1 week, or I think Coal India could come back to a 145, 150 zone. That's a good level where you can maybe take out some partial profits over there and relook at your investment strategy.
Okay. Vikas, how do you read into the fundamentals of Coal India, especially now that so much development has also taken place in the coal and mining space and will also be taking place going forward? So how is Coal India placed overall?
As far as Coal India is concerned, I do not like the stock in the sense that the stock has been a clear underperformer over the last 2-3 years, and there is always a hangover of the government coming out to divest some of its stake. And with the kind of developments which have taken place of late, like the government planning to allow private companies to participate in coal mining, I think there'll be a lot of competition for Coal India as a company. And so I think there are ample opportunities elsewhere in the market. So I also share similar kind of a view on Coal India. I would recommend investors to exit the stock on every rise and shift to some other company within the metal sector.
All right, thanks for that, Vikas. Let's switch to the next query now. Jaideep Arora writes to us from Delhi. He has bought 100 shares of Maruti at 51.30. So I think he's made almost 15% profit. It's currently at 5,800. And he wants to know now for the long term whether he should stay put or sell. So Kunal, let's come back to you on the charts. What do you think about Maruti?
Yeah, I think you should definitely. So I'll advise the viewer, one that you should definitely stay invested over here. The long-term prospects for Maruti charts have been quite strong. In fact, in the last I think 8 or 10 years for the stock price of Maruti, there were twice that the stock had gone through a big cycle of uptrend and then retraced back exactly 61.8% mark before and after touching there is where it started a new bull market for itself, or a new bull trend for itself. So similar was the case even this time around when the stock tested at 4,000 mark approximately I think 2-3 months back. So it hit that 61.8% retracement. So I'm expecting that if a similar phenomena has occurred in the past, it could probably occur even this time around as well. And of course, it's a leader as well in terms of the auto sector overall as well. So I think in that regards, it's a stock which is more strong, more durable, and has shown some very good recovery of late. I believe an averaging on highs as well could be a good possibility. So if the stock moves up to say 6,000 plus levels, you can look to average, or if the stock comes back to say 5,000, 5,500 levels, I think that's also a good level to average further for Maruti. So the strategy should be that you should hold on to it from a longer term view.
Okay, thanks. And Vikas, coming back to you, do you share Kunal's optimism for Maruti?
Yeah, true. I also like the stock, although the stock has gone up from its recent lows. But if you look at it from its highs, it's still available at close to 40% below the yearly highs, which it's made at around say 9,000, 10,000 levels. And I feel once the lockdown is over, once things become normal, and with the kind of fear which people would have in traveling in public transport, I think they would certainly go in for private vehicles. And Maruti, since it's also in the beginner segment of the four-wheeler segment, I think it will stand to gain. It's a quality company with a pretty solid balance sheet and pretty good return ratios, no debt. I like the stock, the fundamentals of the stock, and from the current levels, it can certainly give you pretty good returns. So I would recommend the investor to continue to hold on to the stock, although he's made decent gains on the stock.
Then moving on to our third query, which is also an email. PK Sinha writes to us. He has bought 500 shares in SBI Cards at the IPO price. Wants to understand how the short-term prospects look like. Kunal, SBI Cards, would you have a view, given that there's not too much of historic trends there, but any trend or any observation that you'd like to make?
So yeah, I think it's a good stock in the making. Of course, long-term wise, I can't project because the stock price history is just about limited to few months only. But then whatever data is available for SBI Cards. In fact, I think if I'm not wrong, there was a query on the same stock a few weeks back as well, and mentioned that how the 500-520 mark is acting as a very good demand zone for SBI. So we tried to test this 500-520 zone 2 times, and on both of the attempts, you saw a good resurgence or a comeback happening into the stock price. So if you've already bought SBI Cards, then I believe you should hold on to it. And if you're looking to it from a short-term view, then I believe a 520, 500 mark could be a good support zone. So I think whether you buy it right now and average it at those levels, or you wait for those levels to come back if there is a correction in the stock price as well. So it's a call which you have to take, but I think it's a stock which is into a strong uptrend, at least from a short-term view.
Okay. Vikas, do you also give a thumbs up to SBI Cards?
Yeah, Karunya, I like the stock at the current levels, although the investor is losing money because it applied at the IPO, and from there it has seen a sharp correction. But then it's a good stock, a strong pedigree, and the sector remains highly underpenetrated and offers tremendous opportunities. And I feel in the next year or so, we could see IPOs of other players in the space, and that would lead to positive traction for this stock as well. And I'm sure this stock will come back to its IPO price and even go further and make good, decent gains for the investor if he holds on to the stock from, say, a year's perspective. So I'm bullish on the stock and would even recommend buying into the stock at declines.
Okay, before we move on and say goodbye to both our guests, Vikas, we never actually got in your picks for today. So if you could quickly just share your picks with us.
I would like to recommend 2 stocks for a long-term point of view. The first one would be Vinati Organics. It's one of the largest manufacturers of specialty chemicals. It's a niche company, enjoys higher margins. 2 of its products, it's the world leader in that. And the balance sheet quality is pretty good, pretty high return ratios, strong margins, and absolutely debt-free company. I like the stock at the current levels, and my targets are 1,300 rupees in a year's time. And the second stock which I would like to recommend would be a metal company, a PSU metal stock by the name of Midhani, Mishra Dhatu Nigam. It's again a quality company. The company manufactures specialized alloy steel which goes into aerospace and defense. And the kind of focus which the government has on Make in India and defense, I think this company would certainly do well. And again, the fundamentals are pretty good return ratios, and zero negligible debt in the company. So I would recommend a buy at the current levels, and my targets are 300 rupees in a year.
Solid. Thank you so much, Vikas, for quickly getting those down. I hope you guys heard that. Let's now go over to our colleague Ajay, who is obviously evaluating the next big Reliance check and what it helps Reliance achieve in terms of milestones conquered. Let's listen in.
Well, Mukesh Ambani today has fulfilled his promise made to shareholders at the 42nd AGM that they'll go ahead and make Reliance Industries net debt-free. With the PIF investment coming in from Saudi Arabia, that transaction actually fulfills that promise, and by raising 1.15 lakh crore by the way of global investors, private equity companies, Facebook put together, along with 53,000 crore of rights issue, they have gone ahead and raised 1.68 lakh crore in a matter of weeks, completely changing the complexion, the way Reliance Industries is being looked at by global investors, and our Indian markets too are saluting that transaction which have happened by taking the stock at fresh lifetime high, almost crossing the $132 billion mark for the company, highest valued Indian company. It's a landmark deal and also a win for the country. The way FDI is coming in, FII investment into one company is coming in, it's a landmark transaction for sure. Analysts say that this is likely to propel the company valuation in a different kind of a league. It will be seen less as a oil conglomerate, more of a technology behemoth that the way they are integrating their telecom technology as well as retail all into one, the offering which is getting created is similar to what America Online AOL did in US, what Tencent and Alibaba did in China. And this is a very landmark transaction and a milestone for the company, and clearly positive for the shareholders of Reliance Industries back home in India.
Thanks, Ajay, for that. As RIL fulfills its debt-free dream, earlier in the day we spoke to somebody who tracks the developments with regard to RIL very closely, Jalirani, who shared his thoughts and insights on the same. Listen in.
Well, yes, indeed. I mean, this is significantly commendable. I think it's also that it has been not done in, in desperation when the stock price had fallen to, 850 rupees recently. But it is being done from a position of strength, and after demonstrating their significant capabilities across businesses, not only in Jio, but also on the retail side with the tie-up with Facebook, which gave a significant shot in the arm, and in fact even on their refining and petrochemical side, which during the lockdown has demonstrated that they have managed to run their facilities at very optimal levels. And in fact, as the fourth quarter results also demonstrate, their GRMs have been very healthy. What is commendable is that they have done it from a position of strength. As a result of this, the balance sheet has been strengthened even further. And the question a lot of including domestic and international investors, not just the question, but what the feedback we get from international and domestic investors is that there are very few companies today which are not only relatively safe investments from the perspective of now strong balance sheets, but also have got meaningful growth opportunities. So I think the way the whole company has been maneuvered, not just again from a capital raising perspective, but over the last several years, this is really things coming to a fruition of efforts of several years again, not just the management of these teams, including Jio, refining, retail, but across the board.
From my colleague to the markets to now even Jayesh, who does a lot of data crunching, has come up with some interesting stats for RIL as it's fast approaching the 11 lakh crore mark. How is that compared to the Nifty market cap and movement? Let's listen in.
Reliance Industries now contributes about 14% to total Nifty market cap. This is the highest level of contribution by Reliance to Nifty's market cap. And the chart on the screen will actually show you that we have seen such high levels of contribution from Reliance for the first time since 2010. Pre-2010, there have been many such instances, and that is clearly visible on the chart itself. But the key question to ask, what happens to the Nifty as well as Reliance Industries over the next 1 year whenever the contribution has exceeded 11%? Pre-2010, let me tell you that there have been 9 such instances, and out of those 9 instances, Nifty has managed to deliver negative return just about 3 times. While on the other hand, you have Reliance Industries that has managed to decline 7 out of the 9 times and has also managed to underperform the Nifty 6 out of those 9 times. So definitely history is not on the side of Reliance Industries, but like always, there's 2 sides of the coin and you have to answer 2 questions. Can the market afford to live with such high polarization? And on the other hand, you have to also answer the question, can Reliance actually power ahead given the changing business dynamic and the current environment that it is operating?
Let's now slip into a quick break on buy now, sell now. Plenty lined up when we come back.